All right, stocks wrapping up the month on pace for the first down month since May. However, your three major indices look like they're all set to snap the 4-week losing streak. So what's in store for next week? Everyone's back here. All the big players from the Hamptons. Maybe we get this momentum for most of this week to carry over. Let's ask SureVest CEO Rob Luna and Kingsview Wealth Management CIO Scott Martin. Scott, you've been more or less more skeptical than a lot of other folks. Do you see any message to the market right now, particularly in the last three sessions, that we carry into next week as all the major players should be back? We get bigger volumes and perhaps even people wanting to get positioned here.
Well, I think some hope is back, Charles, so I guess that's good in the sense of maybe we'll see some higher prices. But I'll tell you, technically, chart-wise, I think we're coming up against some resistance, man. You know, 2940-ish on the S&P. You got a moving average up there. You've got some recent highs up there from a few months back. So to me, it's great to see the market retrace itself back up there, but we're going to need another oomph. We're going to need another push above those numbers as far as, maybe economic data, jobs number coming out, maybe some more commentary or rumors from the Fed that might boost this market a little bit more on the equity side, because we've already started to see maybe gold pull off a little bit. Certainly bond yields have calmed down a bit. So the next point here is equities and how they're going to take the next few days of news.
Rob, it certainly has felt like full of sound and fury, but signifying nothing. I mean, it's got to be signifying something. And I like what Scott brought up about resistance, because you don't have to be a technician to see. Every time we got up toward those August 2nd closes, the market fell apart. So we all know you hit resistance often enough and don't break through, it means you go back down.
Yeah, no, that's true, Charles. I mean, I think Scott did bring up a great point. Everyone's looking at the technicals right now because there's a lack of, fundamental data that's coming out that's going to move this market. We talked about the Fed, we talked about interest rates, but really, Charles, you and I both know this is a China issue. And until we can get a deal done, I think we're going to have a really tough time getting past resistance. But in the meantime, I think the reason equities are staying here is because, you look at what's going on with the 30-year bond right now. For the first time in over a decade, we saw the S&P actually yielding more than that. So even though equities might not be going higher anytime soon, you're still getting paid to wait. So I think people are going to stay pat in those equity names. But until we can get past, get a China deal done, we probably will not get past that resistance.
So this is a classic half full, half empty kind of thing here, Scott, because, with tariffs going in, brand new tariffs going into effect on Sunday, you could wonder why we're not down a couple of hundred Dow points. And the fact is, we actually made this turn when those tariffs became official on Wednesday morning, which adds another curious layer to what the market is thinking.
Yeah, and I think, Charles, that's a great way to put it. It depends on what you kind of want to drink in the glass, because if you're an investor that can handle the month that we just had in August, which was tumultuous, sleep-losing, but at other times borderline euphoric, a couple days this week weren't too bad. They were fun to be a part of. You should, to Rob's point, probably hang on to equities here, because overall, I think longer term, as hopefully we do work out something with China maybe this century, things will get better. But the reality to me is this. I think there's other things out there, at least as far as our models are concerned, like gold. As you know, Charles, for example, I kind of feel like gold member here, how much I love gold, because gold is so much different than bonds and stocks right now. It's providing that volatility dampener that every portfolio should have right now.
Rob, as we wait for the next catalyst, we got a lot of great data this week. I mean, factual stuff, not, hints or indicators. And we finished earnings season. Are there any areas that you're looking at that if the coast is clear, you would like to be aggressive with?
Well, I mean, I think across the board, Charles, I mean, you've seen some of these consumer names, especially these technology names like Amazon, back down below 1,800. We really like Amazon a lot right here. And I know a lot of people are worried about this, Michigan number that came out today. But if you actually look at the number Tuesday from the conference board, which we think is a better indicator.